Zynga. There is a reason we know the online game maker is likely to start pursuing an IPO today. An analyst who follows the company closely talked to one of Zynga's private investors and learned of the imminent IPO filing. That analyst is right here, Nitsan Hargil of GreenCrest Capital. Nitsan, Zynga is perhaps the most hotly anticipated IPO filing to come, maybe at least before Facebook sometime next year. Give us a sense of how much you think this company will be worth once it begins trading on the public market and how much it's likely to raise.
Well, it's a company that we see having as much as $1.5 billion of revenues this year and 30% net margins there. So maybe throwing off as much as $500 million in profits. We've not seen companies that have really been profitable up until now.
No, we haven't.
No.
So give us a valuation on the basis of those financials, and we'll find out what they really are when that S-1 filing drops into the SEC queue, presumably sometime this morning. How much should it fetch? What should the public market value be?
Well, we have the company valued at $14 billion on a fundamental basis. Obviously, we have seen the markets overbid on things, but here is a very valuable company. It's difficult to tell, but as I said, fundamental valuation, $14 billion.
And so different from everything else, as you pointed out, because it's making money. And this is real money, right? This is real net income. This is not Groupon profits before expenses.
Exactly. This is absolutely cash in the hand, $500 million a year today, and probably doubling that next year. And as you said, real money, but it's all from virtual goods.
Now, okay, so here's the question, though. As companies begin to scale, as they get larger, and as they face some of the laws of large numbers, is Zynga able to maintain those margins? Can it grow profit at the same rate as it's going to grow revenue?
Well, obviously, it can grow profit even a little more, as margins will increase as those numbers increase, but they can only increase probably just beyond 50%, not much more than that, which means that approximately half of the revenues can be profits.
Now, these revenues, are they organic in the sense that Zynga is attracting new customers to existing properties and stuff it's already got? How much of it is based on acquisitions? Zynga has been a pretty acquisitive company for a little private company.
They've done 14 acquisitions in the past 14 months, and however, they have not purchased many customers. They've not purchased revenues.
It's more technology that they're after.
More technologists, okay. Actually. They've been much more interested in the people creating the technology than technology itself.
Now, Zynga is unique, again, among these internet IPOs because of its relationship with Facebook, so crucial. Is that relationship with Facebook stable? Clearly, Facebook benefits from it, Zynga benefits from it, but who has the leverage in that relationship going forward? Is Zynga able to set its terms with Facebook, or is Facebook the one to decide?
Well, as you can expect, Facebook is the much larger of the two, and Facebook definitely has more power. However, the two companies were able to come to an agreement about a year ago, which is a 5-year agreement. So there remain about 4 years on that agreement, and we see that as fairly stable. At the same time, Zynga is virtually a 10% customer of Facebook, spending $150 million in advertising on Facebook and another $400 million in revenue share with the company. And so, very significant partner of Facebook.
Nitsan, ultimately the question for investors who are going to look at the stock as a potential investment at the IPO or afterwards is the pricing. How carefully does Morgan Stanley, which we understand will be the lead underwriter, need to price this stock, given what has happened with the last couple of internet IPOs?
Well, I think you saw with LinkedIn, they were a little bit too conservative. And with Pandora, they were a little bit too aggressive, and they're still fine-tuning to understand the demands out there. But as we have more and more companies come out there, there is a better chance of them pricing it correctly.
Now, is this the one that they absolutely have to get right because of its unique qualities, the fact that it makes money?
It's a huge one. It's going to be probably close to a $2 billion IPO. It is going to be a very important one.
Now, what, briefly, are we likely to learn about Facebook once this S-1 filing comes into the SEC, as I say, maybe as early as this morning?
Well, we'll be able to tell whether it really is a 10% customer, and so that can give us an indication of exactly where Facebook's revenues are heading. And so we could have a good idea of exactly how revenues are going at Facebook.
All right, Nitsan, good to have you here in the Inside Track. Nitsan Hargil of GreenCrest Capital. He is the reason we know Zynga, the online game maker, is likely to file for an IPO today.